Welcome everyone to the Biodiversity Finance side event of the 2021 annual conference of the Global Research Alliance for Sustainable Finance and Investments, short GRASFI. Very excited to be here. My name is Christoph Nedobil and I'm the director of the Green Finance and Development Center at Fudan University in China. I'm absolutely excited about this event today. Of course, biodiversity finance is quickly gaining in relevance, and I want to highlight particularly two perspectives. First, the big question is, what is the impact of the financial decision makers on financial decisions on biodiversity, and therefore, what is the responsibility of financial decision makers to protect biodiversity? Second, what is the risk of biodiversity loss and the opportunity in biodiversity protection for financial decision makers? So the impact, the double materiality. And I think there are many questions that need to be answered around these financial decisions. And today's panelists could not have more expertise to provide relevant food for thought on these challenges. Not necessarily solutions, but I hope relevant answers and definitely ideas for further research. For this, we have structured the panel in three parts. First, a short couple-minute statement by all of the panelists about what they see as the most important biodiversity finance challenge and aspect. Second, we will have a discussion moderated by my esteemed colleague, Professor Ulrich Volz. And third, we'll have an open discussion with questions from the audience. Now, for this, please send us the questions via the chat function throughout this panel. We will collect them. Altogether, we have 90 minutes for this panel, and I'm absolutely excited. So let me take this opportunity to introduce our first panelist to give the opening remarks. It's Associate Professor Alice Hsu, and I invite all the panelists, of course, to turn on the cameras and so we can see them. Alice she leads the landscape ecology group at Sichuan Tropical Botanical Garden at the Chinese Academy of Sciences in Yunnan province, absolutely beautiful in southern China. Alice has worked extensively across the tropics and previously held positions in Thailand, Australia, Costa Rica, and the UK before moving to China. Her work focuses particularly on patterns in biodiversity and drivers of biodiversity change. Now, she really brings in the biodiversity aspect, I think, really to set the stage. And I'm absolutely excited to welcome you, Alice. The floor is yours.
Thank you, Christoph, and thank you everyone for being here today. So as many of you will be aware, this is a particularly critical year for biodiversity. In a couple of days' time, we will have the IUCN meeting starting, which should, like many of meetings have happened last year, and is their quadriennial meeting. Every 4 years, they come together to discuss some of the major biodiversity issues for the planet. We'll also be seeing the UN meeting on climate in a few months' time, as well as the CBD COP, which was due to be held in my province, Yunnan, in October. However, whilst climate change has managed to garner huge interest and huge finance from all over the world, the biodiversity world has typically lagged in this. If you go to a UN biodiversity meeting versus a climate meeting, you will see a participation which is orders of magnitude higher within climate meetings. And funding also goes alongside this, with climate finance being much more accessible than biodiversity finance. In line with this, what we've also seen is when you've looked at things like sustainability frameworks over the last decade, from about 2010 onwards, sustainability has often been conflated with climate change. And yet we know that functional biodiverse ecosystems are crucial, even to help provide the nature-based solutions we need to combat climate change. In order to meet the major challenges of today, we need to develop effective and appropriate targets to conserve biodiversity. Yet conserving biodiversity is a wicked problem. Whereas it's easy to sell a climate goal of trying to keep climate change below 1 degree, you can't have such easy targets within the biodiversity world. And explaining the complex challenges we face is very difficult to communicate. Finding the right language to communicate what's needed, as well as developing the nuanced targets necessary to conserve biodiversity, is exceptionally challenging. Furthermore, with things like new initiatives like debt for nature swaps, there is a high risk of being accused of things like neocolonialism. That use of money, that use of funding can be conflated with major issues with past history. So finding equitable ways to develop targets that help us to develop sustainably will be crucial and will be especially important with finding these nuanced finance solutions to maintain biodiversity. Alongside with that, we need to realize that most of the major drivers of biodiversity loss tie to finance, whereas that might be consumption, as agriculture is a major driver of global biodiversity loss, or new infrastructure, which also relies on finance. And those financial mechanisms in terms of things like grant approvals, etc., also need to have targets and mechanisms to ensure that they are sustainable and that there are monitoring processes in place to make sure they meet those initial frameworks and do not cause the loss of biodiversity. All of these are huge challenges. They don't have simple solutions. They require clear targets and monitoring. And they also require dialogues between biodiversity scientists and financiers, as well as multiple other actors to make sure we have the right metrics so we develop the right targets, but we can also ensure that those targets are met sustainably. So I think that's all for me for now, but I'm looking forward to what the rest of the speakers have to say.
Thank you, Alice. And also for everyone, I will give very brief introductions and handovers between the speakers because we'll have, of course, the discussion part later. Next, I would like to invite Odile Conchou. Odile currently works at the Secretariat of the Convention on Biological Diversity, CBD, a United Nations environmental program. Of course, everybody knows the CBD, I guess, who's here in the room. She's also the co-chair support for TNFD and has more than 30 years of experience in the field of sustainable development, CSR, and biodiversity. Really, really absolute honor and pleasure to be here, to have you here. Odile, the floor is yours.
Thank you, Christoph, and good morning or evening to everybody, and thanks for the invite. So after Alice's introduction, who set a good view of everything, I will perhaps focus more on the CBDs, the Global Biodiversity Framework, and the next COP15 in China in relation to also to the COP 2026 in Scotland this year. As Alice said, it is an important year. It should have been last year. It is this year and next year's and all the following year. So as you may know, as you said, Christoph and Alice, in April next year in China, the COP15 will happen. And all the parties, 196 parties to the convention, will hopefully adopt an ambitious and transformative post-2020 global biodiversity framework. This framework that will be the overarching policy, if I can say, for the entire world on biodiversity. And it will act for the next decade, and it will be equivalent of the Paris Agreement for biodiversity and the COP15 equivalent more or less to the COP21 in climate 5 years ago. So that's an important moment for all the biodiversity community, but not only for all the business and also finance community. Why? Because when it will be translated into policies and regulation at regional and national level, it will have direct consequences on the operation of company and financial entities. And as you said, and as Alice said, it's not well known perhaps by the economic sectors, and I would say the contrary is also true. The CBD community, as we call them, so the people building this and negotiating these texts, are perhaps not so keen to, not keen, but not so used to work with the financial community. So now we are really working on that because that's fundamentally necessary, because the financial sector will have an important role with the business. I think we have to speak from them together. We'll have an important role to implement this global biodiversity alongside governments, this framework alongside governments, local communities, and so on. And they will be an important part of the solution. In terms of biodiversity loss reduction, but also in terms of climate change, they are so strongly interconnected. development and equitable development also. We speak of just transition, and I think that's perhaps also, you speak of challenge, a point to not forget. Okay, biodiversity, the link with climate change, but to not forget social issues also, because in a lot of countries, we can see, and it's always the same point, this opposition, because these topics, and they are all really interconnected, and perhaps above all in the developing world. So now the negotiation this week and last week, we have negotiation on the framework. That's one of the pre-COP events, the open-ended working group. And I can see that the situation is evolving. I'm not so old at the CBD, but nevertheless, in 1 or 2 years, I've seen the situation evolve. In the last draft of the global biodiversity framework, there are some relevant parts for the financial sector and the business. And during these meetings of negotiation, we see many parties and observers, that's the non-parties, who are highlighting the important role of business and financial sector in providing and mainstreaming biodiversity in their business model and so on. Sometimes on a contradictory way, but nonetheless, they are speaking of that. That's also the first time that we have representatives of the official, I would say, representative of the financial sector, sorry. They have been accredited and they have been allowed to speak and say what the financial sector would like to see in the global biodiversity framework. It's not a detail, that's the first time, and that's really important to be able to hear these voices. And we also on the CBD side have organized a workshop in June in order to allow this connection between the CBD community and the financial sector. And we have also launched a guide made with UNEP-FI, PRI, Business for Nature, and the Finance for Biodiversity Pledge and Foundation. And as we will say today, Elisabeth Bremer, that's not me, but Elisabeth Bremer is a co-chair of the TNFD. I'm only the Sherpa stuff, and one of the two co-chair of the TNFD. But what I would say perhaps the most interesting in terms of challenging is some of the results that we had at the workshop. What we saw is that there is a strong needs and expectation of the financial sector to have a global guidance. What should be in the global biodiversity framework? They want to know what is the 1.5 degree in terms of biodiversity, if I can make this relation with climate, more or less what Alice said. They want to see what to do, where to go, and what is the main goal. They would like to see that in the global biodiversity in a coherent way, clear, and easily usable. We are not there, and things have to evolve, but we see some evolution. They would like to see, as in the Paris Agreement, something around the fact to push the financial sector to align the financial flows to biodiversity positive outcomes. That's an important point. Also, they call governments and regulators to consider their needs and goals. The financial sector, governments can't act alone, but the financial sector also know cooperation is absolutely needed between all these actors, and also between, if I may, public and private finance. The role of the private finance is new, but in relation with the other. So there is a huge challenge of language also, because we hear of biodiversity from the biodiversity community, they don't use the same words. And surely you will come back to that. We hear nature positive, net zero on the side, and we hear biodiversity mainstreaming on another side. We hear different words. So clear guidance, good targets, as Alice was saying, clear indicators, a way to build scenarios also to go to this and to achieve these targets and guidance, ideas of aligning flows, specific science-based specific targets, and a strong link between climate and biodiversity. I will stop there, and data requirements and so on, but I guess Simon will speak of that. I stop there and we'll continue with your question. Thank you.
Odile, thank you so much. I think you really highlighted a lot of the work that has been ongoing and really also fascinating, as you said, the recognition also in the biodiversity world and also in the CBD, which is so obvious, but so in many ways new and changing the financial sector integration in order to protect biodiversity and take the responsibility. This is definitely an important development. And I'm also therefore absolutely excited to introduce our next panelist, Simon Sadek, who does not need, as most of the speakers here, a lot of introduction because I think well known in the biodiversity finance scene. He's the chair of the Finance for Biodiversity F4B initiative. He's also the co-chair of the informal technical expert group of the task force on nature-related financial disclosure, TNFD, which many of you have also participated in the first phase. And he has also worked for corporations, governments, multi-stakeholder initiatives, so many things. He's also, of course, been in the green finance space, also in the climate space. So he has so much experience in really pushing the frontier of green finance. And now his next frontier of green finance is obviously biodiversity. Very warm welcome to you, Simon.
Christoph, thank you very much. And I'm very pleased to be following Odile and building on some of her framing comments, obviously about the importance of global targets in the intergovernmental process. So I'd like to start with sort of two corrections of misperceptions, at least in my mind. Firstly, there are many estimates out there as to how vulnerable or dependent different parts of the global economy is on nature. And probably the one that has received most attention is the work done by PwC for the World Economic Forum that talked about 40% or so. And I'd like to suggest that the correct way of thinking about the relationship between nature and the economy is that every dollar, every job, every product, every service of our $80 trillion economy is entirely dependent on nature. I think it's unhelpful to imagine that part of our global economy in some way doesn't require ecosystem services. It's, of course, a completely wrong way of thinking about it. And the second correction I would like to suggest is that there are many very laudable and well-meaning estimates of the amount of money that is needed to finance biodiversity. And the number, as with climate, is in the hundreds of billions of dollars. And of course, it is a completely wrong way of thinking about this agenda. Our need is to align every dollar with nature positive outcomes. The $350 trillion or so that make up the world's financial and capital markets, the something between 25 and 30% of sovereign finance, that's 25 to 30% of global expenditure makes up sovereign finance, has to be equally aligned to nature performance outcomes. The $30 to $40 trillion that sits on central balance sheets, the $11 trillion that sits across 450 different development finance institutes. We're not trying to mobilize a fund to pay for biodiversity. We're needing to align global finance with nature positive outcomes. And that, of course, is the big lesson that we've learned in the climate space, thankfully. And we don't need to relearn that when it comes to nature. We can simply lift that insight across and forget to some extent about those smaller mobilization numbers. And Odile, of course, would make the correct observation that in the context of CBD and international cooperation, the mobilization of funds is important, but the broader finance and nature agenda is about alignment of those larger flows. And to illustrate that point, we need look no further than the food system. So the food system is an $8 trillion a year part of our global economy. So 10% of our global economy, full value chain analysis. And the most recent estimates by the World Bank of the extent of negative externalities of the global food system is $12 trillion, primarily climate effects, nature effects, and health effects. That means if the food system was a business or an economy that lived within a world where the polluter pays, it would be insolvent, bankrupt, finished. Yeah, so we have a food system that's fundamentally unstable, and it's that food system that primarily affects nature. Yeah, although there are many other pieces, nature, food is the equivalent of clean energy and mobility as it relates to climate. And I'm sure, I know every scientist will tell me that that's too crude a way of thinking about it, but we need to focus much more on the food system. And what we also know is that private financial flows into the food system are both essential and part of the problem. Yeah, that increased market concentration, increased financialization, if you like, of many different parts of the global food system have accentuated those negative externalities, including negative nature outcomes. But we know again from the climate and clean energy space that it doesn't have to be that way, that we can make interventions in the way in which the global financial system works that better aligns private financial flows with the food system that we need and with the nature outcomes that we need. And of course, the obvious foundational example already mentioned by Odile is the Task Force on Nature-Related Financial Disclosure and the Task Force on Climate-Related Financial Disclosure, and the many other related activities that are happening to bring nature and the nexus between nature and climate, correctly into, i.e. priced correctly into financing decisions around the world. Yeah, and the work of TNFD, much like the work of TCFD, will progress over the next 2 years, but with one or two really important differences. And I just want to mention one. So TCFD began its life focused on what most of us would understand as being material financial risk, which, as most of us know, is largely defined by auditors and lawyers, not necessarily by what we consider to be of substantive importance in the world around us. The TNFD is starting with a broader view of risk, nature-related risk as including, of course, material financial risk, but also from the get-go, from the outset, including nature dependencies and nature impacts. So taking that broader frame of risk that is both relevant to society, but of course over time, as we transition towards a nature positive outcome, is relevant to the financial community and the corporate community that it finances. Just a couple of final comments, Christoph, because I know we need to contain our first remarks. Firstly, in thinking about finance and nature, we shouldn't, in our mental minds, only think about lending or project investment. The world's financial markets include $60 trillion worth of sovereign debt, many developing countries of which, of course, are now in crisis because of the pandemic. And we need to ensure that natural capital becomes a core part of sovereign debt markets, and indeed all debt markets, but particularly sovereign debt markets, and particularly for those countries where nature plays a really important role in providing sources of resilience and sources of economic productivity and growth. And then finally, I would sort of circle back to the climate-nature nexus. I think all of us understand that we can learn and draw from our experience in climate, push the nature finance agenda forward, as well as, of course, maintain our focus on climate. But all of us really know that the nature and climate agenda can't be detached in that way. And ultimately, particularly looking at the private sector, we will need integrated transition risk frameworks that take account of both climate and nature and the dynamic relationship between the two. And so although we are entirely supportive of TNFD and are working closely with Odile, Elizabeth Marema, and the others that are leading TNFD, we're also at F4B very conscious of the need to begin now to build a more integrated approach for the financial community in dealing with both climate and nature. Christoph, thank you very much for the time.
Simon, thank you so much. As always, it's such a wealth of knowledge and experience that you bring in this panel. Thanks so much for sharing. I think you highlighted some very, very important points on the role of the financial sector, on the role of the food business, on the role of sovereign debt, and so on. So I think you will have many more, there would be much more to talk about. But I'm also very excited kind of to move now from kind of the standard setting and also kind of the associations to actually to the financial sector and invite and introduce Robert Alexandre Pujadev. Robert is an ESG analyst at BNP Paribas Asset Management, and he's in charge of the financials, consumer staples, retail, forest, packaging, chemicals, and agrochemical sectors. So very much related to also some of the sectors that Simon just mentioned. And he has been leading the BNP Paribas Asset Management thinking on natural capital and is a member of the Zoological Society of London, Spot Timber, Pulp and Paper Technical Advisory Group. So very warm welcome to you, and I hope you can share with us kind of what is the financial sector, the actual financial decision makers. How are they viewing all the some of the things that Simon, Odile, and Alice just mentioned? Also, please stick ideally to the 4 minutes. I know it's very hard, but this way it gives us more opportunity to discuss later.
Thanks, Christoph. Yes, I'll make sure to be not too long. And thanks for the intro and for inviting me. So yeah, I think I have like a few remarks, opening remarks to make. I think the first one as a financial institution. So we are the investment arm of the Paribas Group, BNP Paribas Asset Management. I think we cannot say today that nature loss is not material, that it's not important, that everything is indirect, that we don't have any exposure. You know, this is something that cannot be heard today in the financial community because of what Simon said. For example, all those reports that were out, all the trillions, all the dependency on nature reports that we've seen are showing that biodiversity loss is a key physical transition and systemic issue. So it presents key risk for the financial sector. The latest testament of that is the report from the Banque de France, who has shown the linkages between biodiversity loss and the financial stability using the Encore dependency work from the UNWCMC, and also using some modelization based on the on biodiversity indicators. So, you know, this is a reality that no financial institution can deny, right? So that's a good thing that we're seeing a lot of momentum building on raising awareness from the financial community. So in a similar fashion as 2015, where there was COP21, and then the TCFD, which is the framework element that was accompanying climate finance being built. We're seeing that on biodiversity. So there's a good momentum on biodiversity finance with some commitments that have been made, like the climate commitments that have been made towards carbon neutrality. We're starting to see corporates and financial institutions, you know, taking action. But I think we're not there yet, and the financial community has really to realize that they really need to deal with the two crises simultaneously. So the biodiversity crisis and the climate crisis, because obviously of the interlinkages and as shown by IPCC and InBES reports, the two has to come together. So, and this is why I depart a little bit from what Simon said, but we will discuss it later. I totally agree on that. Every dollar should be spent on that, but the big numbers that are being raised by the WEF, so the World Economic Forum, all those trillion numbers, all these dependency numbers, they are powerful to raise awareness for those who are not conscious today of how important biodiversity is. So there is a power to read those numbers, even though I understand what Simon was saying. So I think FIs need to go beyond the awareness phase to really build strategic roadmaps like the one we do to address biodiversity loss. So to dedicate more resources to tackle from an ESG integration perspective, so to take into account environmental criteria into their decision making, biodiversity, water, ocean, whatever. Also, we'll have more stewardship activities when they are voting in general assemblies, when they are having corporate dialogues, either in one-to-one dialogues with companies, with their investees, or with other investors in a collaborative manners, how they influence policymaker, and obviously all that is really important to bridge the funding gap that Simon also mentioned in the billions. This is what we're trying to do. We're trying to do that, evolving around our 6 pillars of sustainable investment at BNP Paribas Asset Management. And obviously, the other points that we will mention, obviously, today are the obstacles around data and disclosure to that sometimes hamper investors from making good investment decisions, and aligning our investments with nature positive, let's say, investments. But I think we shouldn't, investors shouldn't wait for perfect disclosure, and it's sometimes for them an incentive to remain passive when they see, we don't have that data. So I think it's just to conclude, the good recipe for trying to align our investments with nature positive elements. It really involves strategic planning. So it means that as climate has been the strategic priority of many investment firms, now biodiversity should be also a strategic priority, with resources, with passion, because it's hard. There are many challenges to tackle, and a lot of collaboration between science, NGOs, corporates, regulatory investors, and of course, there will be a pinch of important acronyms such as TNFD, where BNP wants to play a role, of course, and we played a role in the tech, in the informal working group, SBTN, DNGFS, IFRS. So it's going to be a long journey to align the flows, but there's a big momentum today, and I believe it's going to be possible.
Robert, thank you so much. Also, I kind of very hopeful kind of what we're hearing from you. And I think we're all seeing a lot of challenges in biodiversity conservation, and all aligning the financial system, harmonizing the financial system with nature's needs. So I'm very glad that you brought up a lot of these points, and also kind of the strategic putting it as part of the strategy of a financial industry, and kind of doing it from the top down, not just saying like we have like some CSR department that sometimes does some positive biodiversity investments. And I'm also happy you brought up the question of data and disclosure, and there's of course a big question mark around that, and I'm therefore also very, very happy to invite our next panelist, Marianne Haar, to share her thoughts. Marianne is the Executive Director of the Green Digital Finance Alliance, with the objective to harness the power of fintech to unlock for the Sustainable Development Goals and the Paris Agreement on climate change. Marianne has been an external advisor on tech development to the Danish Ministry for Foreign Affairs. She was an executive leader at Sustainia, leading the development of the Global Opportunity Explorer, a digital platform for sustainable business innovation in partnership with the UN Global Compact. So I'm very, very happy, Marianne, to welcome you to the floor and share your thoughts. Again, also please, of course, stick with the time.
I most certainly will. Thank you, Christoph, and thank you to my fellow panelists for excellent opening remarks. As you said, where we are laser focused is really on how can fintech support the transition from a nature negative to a nature positive financial system. And in my opening, I will just share with you 3 roles that we see are specifically a high potential impact of deploying digital technologies. First one is what we've already touched upon, which is on the data side, to give investor-ready data to financial service institutions. The second is to use digital technologies to innovate financial and capital markets so they better respond to the needs of nature assets and are thereby better able to catalyze funding into these assets. And the third is really how to leverage digital technologies to make this not only an agenda of the few, but the agenda of everyone. So to engage people in how they deploy their savings and consumptions into nature positive products and assets. So the first around data, well, 70% of investors believe that a lack of available data is a key barrier to making investments that supports biodiversity. But really, when you look at it, the main data challenge is to a lesser extent a lack of supply of biodiversity data. It's rather the way the current databases or data sets are structured. Because the way they are structured is that they are location specific. So they are not linked to financial and economic activities. So that means that they are difficult and they are high cost, high transaction cost if these data sets are to enter the risk models of financial service institutions, risk and valuation models. There is more than 250 biodiversity databases, mainly publicly funded out there, and they are not well structured for finance. One of the big issues that we have been looking into together with Finance for Biodiversity is how can we unlock and make this data diffuse across capital markets? And there is that one data set, which we've also been searching for physical climate risks and be able for physical climate risks to enter into the valuation and risk models of financial service institutions, and its asset geolocation data of company activities and the activity of the company value chains. If we had that asset geolocation data, we could overlay it with a lot of the open source data repositories. So the Sentinel-2 data, which is for, and the data from Landsat data, where you can actually have algorithms directly analyze in real time on asset geolocation, what is the deforestation impacts of specific activities. The data sets out there are ready to do that. We have a lot of data on runoffs into the oceans. We have lesser on plastic leakage, but if we had asset geolocation data, we would be able to unlock a lot of these databases and have more investor-ready data to investors. So we've been looking at, together with F4B, what are the types of new data models we need to incentivize corporates to share this data with investors, because they have the information, more and more have their supplier list, even tier 2 and 3, but they will not disclose it publicly, of course, because it introduces new market risks. So how can we use technology to use new types of data, marketplaces and exchanges, where we use privacy enhancing technologies, so this data is only available to the investors that need it and do not introduce new types of risks. And of course, this is something that needs to have high political backing for these types of new data models to start to enter the market. The second is really the fact that nature assets, they behave differently. And one of the features is that they're too small for capital market requirements. So they cannot access capital market funding. So how can we leverage digital technologies to, in a cost-efficient way, also issue bonds on nature assets using distributed ledger technologies and other technologies that lowers the cost tenfold of issuing these types of financing instruments. And also at the asset level, we know that a lot of the nature assets do not have the same types of strong business models as other types of asset classes. So how can we package nature assets differently and in a cost-efficient way? So we can package a rewilding asset with no business model together with a forestry asset, which has a strong business model, and issue that average ticket to investors. So they also become invested into nature, and there it becomes a personal concern to them whether nature flourishes or not. The last issue is how can we make this a people's agenda? Now, for most people who invest their savings through an asset owner, they sort of lose track of it. But a lot of us are now putting parts of our savings through robo-advisories, through online retail investment platforms. And a lot of us, our shopping experiences is more and more migrating online. That means we are leaving a huge digital footprint on what our preferences are. How can we use this digital journey to make these nature positive user journeys that give us the transparency, incentivizes us to put our money into nature positive transition. And that will travel into transition risk on the balance sheet of investors once we get this information to people and they start to act in a nature positive way. I will stop here.
Marianne, what a powerful message that you sent. On several fronts, data are there. We have to use them. We have to make sense of them, and we have to overlay them and make them useful for the financial sector. I think that's quite obvious. The task is daunting, but I think it's promising with all the technological development that we are getting there, and we can actually make decision grade data provision. Also, really kind of the last point that you brought home is kind of how can we make it a people's agenda and not just an agenda of the few. I think very, very relevant. I think creating this awareness or recreating this awareness, because in some ways, in some countries, I actually believe that the climate agenda has almost like pushed away the biodiversity agenda over the last 10 years, where biodiversity protection used to be higher on the agenda in a couple of decades ago. So very, very interesting and perfect segue to our next panelist, who is also our co-moderator of today's session, Professor Ulrich Volz. He's a professor in economics at SOAS University of London and founding director of the SOAS Center for Sustainable Finance. He's also, and now kind of, we have some titles here, Senior Research Fellow at the German Development Institute, and Honorary Professor of Economics at the University of Leipzig. He's also a chairman of the Japan Economy Network and a co-editor-in-chief of the Asia-Europe Journal. I could continue, but I think your messages will be much more important than your job titles. So Ulrich, the floor is yours.
Thank you, Christoph, and thanks so much to all the fellow panelists for being here. It's been really fascinating to listen to you. I'd like to highlight the nexus between nature and sovereign risk. Over the last couple of years, we have developed our understanding how climate change threatens macro-financial stability and also how it can have very material implications on public finances. And we've shown, for example, in some studies that climate vulnerability is driving up the cost of capital. And we have seen over recent years, increasingly, central bank supervisors pay attention to the topic. Now also the International Monetary Fund is added. It's now trying to integrate climate into macro financial risk analysis, debt sustainability analysis, and so on. And this is fantastic. But what is still missing by and large in this picture is biodiversity. And we've already heard in the various interventions how much it matters. And I think Simon put it very nicely when he said, our entire economy is absolutely dependent on intact nature and biodiversity. And so given the threat that the current trends in environmental degradation and biodiversity loss pose to our economies, it is really high time that we also pay attention to the risks that ecosystem collapse poses to macro financial stability and public finances. And the World Bank just a few weeks ago published a really important report where they described the risk of ecosystem collapse as a systemic risk for our economies. And the implication is, of course, that this also poses a systemic risk for our financial systems and financial stability. And it also poses or may pose a systemic risk for public finances. And so we do have now various initiatives underway to look at it, but we are very much behind. And so we really need to get a much better grasp on how macro financial stability, public finances may be threatened by biodiversity loss. And of course, we need to pay much more attention to how we can mitigate these risks and how we essentially can realign the financial system and kind of turn it from nature negative to nature positive, as has been highlighted, but also how we can integrate it into the various regulatory frameworks at the national level, but also major international frameworks. And so I think this is an area where we really need to speed up our work. We have a number of central banks, really a handful, the Dutch, the Malaysian, the French, Brazilian central bank, which have started to conduct studies in this. We have now, very importantly, a study group by the NGFS, the Network of Central Banks and Financial Supervisors, for greening the financial system. So there really is growing awareness, but as I said, we are lagging much behind. And given the urgency, we really need to push this. And I'll leave it at that. But I very much look forward to deepening this point, and of course, the various other points that you have made. Thank you.
Uli, thank you so much. I think kind of the question of sovereign risk and the loss of biodiversity is definitely extremely challenging. Before I introduce our last panelist, I also want to invite everyone again to submit questions via the chat box, and we will have time for questions, of course, at the end. It's of course extremely difficult to ask the right questions. The breadth of this discussion already in the first round is very wide. This is on purpose because the issue of biodiversity, as you can see, is covering all different aspects on the sovereign, on the private finance, on the standards, on the data. And we are just moving ahead to really wrapping our head around this topic, also in the academic community, also particularly in the financial academic community. And so it's really promising to see so many questions and so many topics raised in this panel. Our final speaker will also continue on this and raise another very, very interesting topic that Simon also touched upon very briefly. It's the Tenke. She's a senior impact advisor at SOAS Partners, Tenke Soltani, and she has over a decade of experience in impact investing, and she's also the founder of the ESG and impact advisory firm Better Finance, as a committee member in Geneva for 100 Women in Finance, a member of Sustainable Finance Geneva, and sits on several impact investing fund boards. So she was also previously at USB. She was the director of impact investment at UBS. So a very warm welcome to you, Tenke. Very, very good to see you here again.
Thank you very much, Christoph and colleagues. It's been a pleasure to hear from the panel. I think a really interesting set of issues, and I will try to add a little bit, if still possible, to the conversation, primarily talking a bit about biodiversity embedded in a nature-based use of proceeds, and looking at some of the sovereign debt instruments that are evolving on the landscape, as well as how this is contextualized overall in the ESG and the impact investment market. So perhaps to start with that point, as you mentioned, Christoph, I've worked extensively in the banking sector and in the private investment side of things. And we are very lucky, I think, to have Simon and others leading on the TNFD, because this is going to be central to how investors view investments in the coming years ahead. I think it will be a quicker discussion getting around the table than what's been happening with climate, but it's really central into embedding biodiversity into the cost of capital. So we know many investors, be it emerging or developed markets, have exposure to high biodiversity regions, whether it's because their factories are there or they're reliant on water sources, or indeed on dense forest resources. We know that the depletion of these resources significantly does impact how their financing can go ahead, what banks are going to finance them, in fact, and where those use of proceeds go. So I think from an ESG perspective, from an impact investment perspective, the biodiversity impact metrics are not very well thought out yet, but TNFD and others are going to be contributing to this process I do some work as well for UNDP, who's contributing significantly to developing the thinking around this, as well as these indicators. And I think this will be a central part of the investors toolkit, hopefully more quickly to come in the coming months and not years ahead. Besides that, if we move from the private investor landscape up one level to look at how institutional investors, and I guess to some extent governments and those advising governments are investing, we've really seen a lot emerging in terms of biodiversity as a use of proceeds on the debt front. So of course, there has been a lot of press around debt for nature. We have looked at this quite extensively, supported by groups like F4B and others, and indeed put in place probably a handful of transactions that have taken off in fits and starts, and many frankly petered out to this date. And it's not because of the use of proceeds being complicated. It's not because biodiversity is poorly understood, or because governments don't want to invest or investors don't want to see this, but rather I think the nuances of putting these transactions in place are what really has caused the industry or these instruments to falter. What that means is that rather than having 15 debt for nature transactions right now all over the world, these countries that are facing debt crises and have very strong biodiversity assets are now looking at other tools. So in part, these are nature performance bonds. In parts, these are SDG linked bonds or other thematic instruments. Or in the case of a country like Uzbekistan, who very recently issued a green bond, there's also a nature-based use of proceeds there, which is not so blatant. It's not going to capture the headlines, but it is in fact embedded in how these debt instruments are structured. So it's very interesting. I think that we're moving away from this headline grabbing Seychelles-style blue bond issuance to a more subtle, but still nature-centric or at least nature-positive sovereign debt and bond use of proceeds. Part of this is also driven by the NDC discussion, so the climate promise and those development points that countries put into place over 3 or 5 or even 10-year periods. So in certain countries, if we look at the fine print of what's already been written, in fact, there is scope there for a very specific dedication towards nature-based investments and biodiversity, which is now being embedded into the forthcoming bond issuances that are coming to the market. So I know many people don't want to dive deeply into those loan documents or even what's issued on the public markets, but I can tell you with certainty that we are seeing some very positive developments there. Then in terms of how to get more financing flowing into the sector and specifically around these debt instruments, one issue that I'm looking at closely now via UNDP is to explore how credit enhancements and de-risking these instruments can take place. We know that in the case of debt for nature, entities like DFC, so the former OPIC in the US, were absolutely central in enhancing the credit ratings of potential instruments like in the Seychelles so that they become investment grade and attractive to investors. Few insurance markets, though, are prioritizing this area. So yes, there is political risk insurance, but it really has not been applied to these still relatively niche instruments that target nature as a significant part of the use of proceeds, or indeed as some of the outcomes that need to be achieved. So what we're looking at now is how to enable this market through insurance. We know there are a few providers that are relatively small but have an interest in this. But those that are the size of DFC or MIGA have not yet really taken the baton to run with. So I'm hoping this is going to change. What that means is if we do have this kind of insurance policy in place, it's going to unlock not just more sovereign bonds or SDG bonds or even debt for nature swaps, but instruments that are perhaps newer. They don't have to be innovative, but they are for the countries that tend to be very high risk, but still very high in biodiversity, which are many of the ones that I think we are talking about today. So that's also forthcoming. I think a lot more we will hopefully be seeing in the press to come, which also means more instruments being finished up. Besides that, the only thing I would still add is in terms of getting more parties to the table. So of course, there's a big question mark around the Chinese participation in these types of instruments. I think everyone's trying to push and pull, and Christoph, we are going to need you to weigh in on what's happening next in terms of providing credit for nature-based transactions. And then beyond that, I think it's still engaging the private sector, as I mentioned in the beginning, who do have an interest in the materiality behind biodiversity biodiversity, but sometimes aren't very visible or don't want to be leaders in supporting any kind of debt restructuring or debt for nature, or what's viewed as complicated or perhaps expensive to generate and not necessarily producing the types of returns that their investors and their shareholders are most interested in. So I know I have just laid a bunch of issues on the table, but really happy to dive into them piece by piece or instrument by instrument. But Christoph, colleagues, thank you very much for having me here today.
Thank you so much. And I think I did not promise too much at the beginning when I said we won't necessarily find the solutions, maybe some answers, but definitely a lot of food for thought. And this is, of course, what the research community of GRASFI and relevant colleagues are also looking for to push the agenda even further. Now, I want to hand over for now, kind of the next part of the panel will be moderated by Uli, who has prepared some really, really tough questions for our panelists. But also, please, I already see some questions in the chat box. Please keep them coming. We will sort them and also answer them, try to answer as many as possible.
Thank you, Christoph, and indeed, thanks to all the panelists for really very insightful kickoff remarks. Let me throw a first very general question at you, but I think that is one that does come up often when you start talking about biodiversity finance. So critics of biodiversity finance often say, well, this agenda is just about monetizing nature. What do you say to this? What's your response? And anyone who wants to go ahead, please do. Simon, please.
Yeah, I'll dive into the deep end. So firstly, we already are monetizing nature to the tune of 80 trillion a year. Yeah, and so the question is not, shall we monetize nature? The question is, how do we do that in the most effective way? And where do we need to restrict the monetization of nature? Now, a really good example of that is the current debate over the governance of a new generation of voluntary carbon markets. And the initiative that Carney and Winters from Standard Charter has pushed forward, the Task Force on Scaling Voluntary Carbon Markets, appears not to be about nature, but actually the majority of expected carbon offsets are going to come from nature-based solutions of various different kinds. So actually, it's a perfect example of where a big push in the carbon offset space is actually completely connected to a particular way of thinking about the monetization of natural capital. Now, F4B, along with climate advisors and Orbitas and others, are inputting not into the technocratic details of the design of carbon markets, but the critical issue of their governance, and are really pushing for a next generation approach to transparency and a next generation approach to the ability of diverse stakeholders to be able to both see the full transaction that takes place and also to raise concerns. So a more sophisticated, if you like, version of a grievance system across the value chain that exists within voluntary carbon markets. And I think we should, in a sense, back off from the question, should we monetize, and really raise the question of how do we monetize, which ultimately comes down to a matter of governance. And I would conclude the comment by saying voluntary carbon markets, with all of their issues and problems, which I won't even begin to rehearse on this call, are the thin end of the wedge of a new generation, I think, of nature offset markets, that could be hugely useful or hugely problematic, depending on how we really build governance models to ensure that they align to their public purpose. Thank you.
Thank you, Simon. Tenke, was that a hand?
It went off screen. So I absolutely agree with what Simon's saying. And I think having a deeper dive into carbon markets would also be very interesting, time pending today. But I would also add that in terms of monetizing nature, we need to be a little bit more creative about the revenue streams. So if we look at how most institutional, even private client portfolios are set up today, from the strategic asset allocation perspective, there is almost always room to add a nature-based instrument or investment, be it a direct or a fund or otherwise, because it's uncorrelated to what the rest of the markets are doing. So if we take a look at how the marine protected area landscape is now evolving, it's exactly in line with the question that you're asking. So we, I guess, as a market, have been able to assign a value to these marine protected areas based on a myriad revenue streams that they can provide. And I think we need to do the same very proactively with other nature-based and biodiversity-based revenue sources. I'm thinking of the rhinoceros impact investment, so the rhino bond that was also very recently in the press. It was a question of putting a financial value onto rhinoceros, and it's not because they eat the grass, which I don't know, in other places would have a value of X, Y, Z. This is absolutely not the case with rhinoceros. It has a trophic value that's not worth monetizing, but from an ecotourism perspective and from a charismatic species perspective, entities like ZSL and others were able to come up with a bond that actually puts a value on this that is attractive to investors. So it's just a question of creative thinking, and then being able to talk to the investors about how this would make sense for their investment audience.
Alice, is that, I think you've had your hand up as well.
So just building on what the other said briefly, I think we need to move past the should we be monetizing this to a question of how we monetize the conservation of biodiversity, because the bottom line is that if there are not financial mechanisms to maintain biodiversity, it's not going to stay there. We live in a world where people have needs, and particularly in the developing world, which is where the majority of biodiversity is, they need to develop. If we don't find equitable ways to enable them to develop, which includes green finance, we are going to lose biodiversity. So we need to stop trying to philosophize this and think about, well, we shouldn't be monetizing it, and think about the mechanisms behind what is green finance. How do we have things like green value chains, green supply chains, etc.? Because until we do that, we are going to continue to idealize these solutions and not have practical ones that we can actually enact. And something that has happened more and more in recent years is we've actually been able to develop technologies that allow us to do things like greening supply chains, etc. In addition, the carbon market has become a big one. However, we're starting to see things like biodiversity offsetting without good definitions of what that entails. Without clear definitions of what it entails and the criteria that need to be applied, then actually it can lead to the misapportioning of funds. So you can conserve the wrong areas, or you can even have perverse incentives which damage biodiversity. So we need to move away from just thinking, should we be doing this, to thinking about how we can do it in the most effective way to provide economically sustainable livelihoods for developing parts of the planet, and also develop targets with appropriate monitoring to ensure that we can keep biodiversity in those areas.
Thanks, Alice. I think that was a very, very convincing statement, also very much reiterating what Simon said before. So if we want finance to really take this course on board, we need to make sure that we have the right incentives. So we have been hearing quite a bit about nature positive finance in the panel so far. But if we look at the financial industry and what's happening now, much of it doesn't even seem to consider nature neutral, so not to speak of nature positive. And so the question is, do we have the right incentives? Is there kind of the business case for nature positive finance on a large scale? Or do we need to make sure to create that through other instruments, so through financial governance and so on? So what do you think? Where are we on that? And I see Robert's hand.
Yes, I think this is really one of the most crucial points of today. This terminology, like positive term. I think it's very difficult from a financial institution perspective to grasp this because of not clear methodologies to say this is a positive, let's say this company has a solution who provides a positive impact on nature. It is easier to say today, given the instrument, the tools, the data we have, to say that this company can have a negative impact on nature. For example, we've launched a partnership with a provider called Iceberg Data Lab. So they use like modelization to compute those numbers and say, give a company X has impact Y on biodiversity using MSA-based metrics, which are coming from, the PBL global model, for example. There are similar other tools that could like help understanding the negative impact, but on the positive side, I haven't seen anything to date for us to really guide us and say, I want to create positive impact and how can I do that? Because also of the complexity of let's say, of dimensions which come into nature. Is it like marine biodiversity? Is it terrestrial biodiversity? Is it aquatic biodiversity? We don't have a lot on marine one, for example. Even in statistical databases. So do you take into account water, land, soil, beneath the soil, and how to blend those elements into a nature package, let's say, and say, okay, this is my positive impact. So lots of questions which are not really dealt with yet. From a financial perspective, there's a working group to try to figure out what we can do, like called the PBAF, so Partnership for Biodiversity Accounting Financials, which we're part of. It's mostly a Dutch initiative, but now it's open to different investors. So where we try to think about that because of this accounting issue, let's say. So I think it's maybe a prerequisite before we can say we want to be nature positive. And there's a lot, I think, to say also on the alignment side, because one thing is to mobilize capital and try to launch funds who can address biodiversity loss. It's possible to do that, but again, you cannot say that this fund will have a positive impact on nature because you cannot claim anything if you cannot prove it and measure it yet. You can just say that there are companies who can provide solutions too, but without saying they will create positive impact. And the other thing is to align with, let's say, nature neutral or nature positive. And for that, again, you need this measurement of positive impact, which we don't have. So I think we might touch on that later, but I think from our perspective, from the financial community, I think we need to send signals and say, this is important. We want to launch fund, mobilize capital, and we want to align, but also we don't want to do greenwashing and say, we align and we are biodiversity or nature neutral by 2030, but without any proof or to show that we can do that. From a regulator perspective, from very recent stories that we can read in the press, it's a hot topic, greenwashing also. The regulator is very strong, even and especially in France, for example. So we have to demonstrate everything we do as far as ESG is concerned and as far as nature is concerned. So just wanted to bring that piece about the positive impact measurement, which I think is key. And we rely a lot on the SBTN, so the Science-Based Targets for Nature, worked on ocean, land, forest, to really help us understand on this positive impact methodologies.
Thanks a lot, Robert, and also for highlighting the problem of greenwashing, which of course is a perennial problem in this space. Marianne, you already highlighted the potential of digital finance to leverage green finance. So it would be great to hear your thoughts on the business case for nature positive.
Yeah, thanks a lot. I wanted to first just support what Robert is saying in terms of that's also why it's so important that we have in the TNFD not only the risk lens, what Simon also said, but also opportunity pathways that we can actually get from TNFD, hopefully, per sector, a taxonomy of what does nature positive look like and what are the transition pathways per material sector, starting with food probably. I think looking at, and I agree with Robert, as long as we don't have that structuring of the market, so the metrics, the data to support it, it's going to be difficult for FIs to set any type of nature-related institutional targets, whether that being neutral or positive. But I do think what we're going to see first is probably more setting net zero deforestation targets as a neutral target, because of the fact that that's where the measurement and the data layer is most readily available. We have already quite a number of asset managers, part of the Finance for Biodiversity Pledge, that are using Sentinel-2 data sets and are using other software solution where they just enter the geolocation of their assets, and then they get with historical data sets, they get the deforestation risks and impacts, so they can actually be confident that they can set such a target. So I think a demonstration of what that looks like in a net deforestation target would be something, and leveraging digital technologies. Now, what is important is that we have, in a sense, nature positive technology stacks out there that are open source, that are like we have for all the coders in GitHub. You can go and take algorithms that are already designed. We could do that as such a data repository or an algorithm repository for nature positive, where we could start with, okay, because the most expensive is to develop the artificial intelligence to do the analysis of the satellite data. The satellite data is free, so you can do that, but it's costly, and we are having a lot of different silos developing the same algorithms. So if we could have that in a repository, and that could be for sovereign bonds, or it could be in private markets, then you can just pull that and say, okay, this is the standard algorithm. If I set a neutral net zero deforestation target, and I have asset geolocation, then I can apply this algorithm from the open source technology stack. I think that's what would be extremely helpful.
Great, very encouraging.
And if I may, sorry, can I cut you? And if I may, it's so transparent, open data in this repository. Also, I think it would be important to overcome the definition issue that I think Alice you mentioned about, so there are different definitions on nature, biodiversity, what is a forest. If you have a satellite that says, this is the reality, you don't have a debate with around those definitions. So yeah, just want to bring that.
Well, there is more of a debate than one might think, because the definition of what constitutes forest is very variable. A lot of it comes from the forestry sector. And so these kinds of tools are critically important. We need to know where we're losing forest. And things like the Roundtable on Sustainable Palm Oil, which was meant to make the palm oil sector sustainable, has been found not to be actually nearly as green as it should be because of the use of satellite data. These tools are fundamentally essential to enabling us to reach these targets, but we also need to make sure that there are clear partnerships between scientists and businesses to make sure that this data is used in the best way, because biodiversity is complex. It's very challenging to use it in a realistic way. And if we apply the wrong definition or the wrong tool, we can make the wrong decisions. So I think developing these frameworks is absolutely crucial, but we also need to make sure we have the partnerships to make sure that we're double checking, verifying, calibrating, and making sure that together we can develop the best solutions.
I may, yes.
I think Odile has had her hand up for quite some time, and then Simon, please.
Yeah, if I may, I wanted perhaps to be a bit provocative. I think your question is right. Before being nature positive, you have to go out from nature negative to nature neutral. Because we have on the side, it's not only a question of financing a lot of nature positive projects, but it's mainly, I would say, a question of no more financing nature negative projects. And that's a risk side, but that's, if you want to stop biodiversity loss, which is the main purpose, you have to avoid this biodiversity loss in the project you are financing and in the value chain and so on. That's right for food, for agriculture, but for, in fact, many sectors. For that, there are some standards which are existing, And as Marianne said, there are data. There are data. I completely agree with what you said. There are a lot of databases, but they are not translated in financial data. Okay, but you have biological data, and you have also people who knows exactly what it means biodiversity, who are able to go on the ground also, not only through satellite, to look what it is and how to deal with this biodiversity things. So because, you know, if you speak only on nature positive, and it's not to say this wording is not good, absolutely not, but and you continue the business as usual, you are not nature positive. So that's really the both have to be treated together, but don't forget to manage the risk part, and after that to think about what could be financed as a positive, if you want. And I say that because before being at CBD, I used to be in a bank, coming from the financial sector, a public bank, the French Agency of Development Bank, and I was dealing with that. And that's true, biodiversity, that's not easy, and to look at, to manage, to see what you have to do. It's complicated to explain to your financial colleagues and so on, but use partnership, use consultants. There are a lot of ecological consultants able to help you. There are some tools available online and so on. First of all, to no more do if possible business as usual, and after that the financing of nature positive part will come. And and for that, I think the main important is perhaps to explain to the people what it is, a positive project in terms of biodiversity. So other tools are needed which don't exist now as or doesn't exist now as taxonomies and so on. Thanks.
Thanks, Odile. Simon, I'll get to you just in a second. I think that's a really important point, and the you know, kind of do no harm principle, I think, is really important in this context as well. And as much as important as the discussion about scaling up green finance, climate finance, biodiversity finance, and so on is, it is at least as important to talk about what we must not have financed. And here, the track record of the financial industry for the time being is still very, very bad. And so we've been having lots of discussions about green taxonomies, but we certainly need much more discussion also, and importantly, action on dirty taxonomies to really drive out financing activities that are really undermining our common future. Simon.
And perhaps sorry, Simon, if I may add something, because it's not losing money. Perhaps at the beginning it will be complicated, because that means that some project won't be financed anymore. But after that, the market will be much more cleaner, if I can say. And that was the same for ESG and for climate before. So because that's a big fear of the financial sector, if we do that, we will lose money, we will lose markets. Perhaps at the beginning it can be. I remember some CEOs of banks saying that, but at the end, and not in a too long time period, but shorter time period, your market will be much more sane and safe also. Sorry, Simon.
Simon, no reason to be sorry. I'm going to continue, Odile, along your provocative pathway, but I can't avoid making the point, you know, if you held Exxon shares 10 years ago, then you may have lost some money. So I hope all sorts of people will lose a lot of money as nature and climate is integrated, because that's actually how financial markets work. But my point was going to be slightly different, and Uli probably will irritate most people on the call, which is my speciality, you know, which is people in the biodiversity space like complexity, people in the financial community like simplicity. Yeah, and we have to be really clear about the implications of these two really extreme differences. Yeah, if we want the financial community to learn about biodiversity, I can guarantee you it's a losing wicket. There will always be specialist funds and actors that really get into the core of biodiversity dynamics at the science level and figure out the underlying risks and opportunities. But the 99.999% of the financial community operates on a commoditized basis. And I don't mean commodities, I just mean desperately simplified and standardized. And unless nature becomes a prefix to the word finance, we can't hope for them to become kind of intelligent and engaged. And I really am not seeking to dismiss the leading edge of folks such as in BNP Paribas and Morova and others who have really launched themselves deeply into the science, but you know yourselves that that's not how the rest of the sector is going to work. That means we need to do really simple stuff in the context of, as Alice and others put it, very high levels of complexity in the actual substance of what we're trying to deal with. And I'll give a couple of examples. Marianne is absolutely right that we need to look at upside opportunities as well as downside risks. But the truth is, if, for example, the UK Environment Bill goes through and drives a legal requirement for corporates to report on illegal deforestation, even if there are complexities around what we mean by forests, Alice, to your point earlier, that's making it simple. That's going, this is not just credit risk, this is liability risk. And you should be aware, Mr. and Mrs. Corporate, that if you do not report effectively against this due diligence piece of legislation, there will be hell to pay. And if one layers on top of that a new round of work in linking environmental crimes to anti-money laundering regulations, that will shift the lens from a pure credit risk approach into a full-on liability-related approach. Now, my point is not we shouldn't be interested in upside. So I agree with Marianne and Odile and others, and all our work on food and finance is looking at alternate protein and all of this stuff that could support nature with major investments. But actually, we have to keep remembering that the financial sector is a really dumbed down system when it comes to both nature and climate. And we have to develop tools and mechanisms that take account of that sort of key phrase, sort of keep it simple for us to really act.
Thank you, Simon. I'm keenly aware that we are running out of time, and I do want also Christoph to bring in some questions from the audience. Tenke, do you have a very quick?
It's very quick. It was just to remark upon the SFDR legislation that I think is going to enable a lot of these discussions to move forward. This anti-greenwashing legislation in Europe that requires all investors to classify their funds on sustainability grounds and be transparent about how those sustainability metrics are being calculated. So I think it's very positive from the European perspective.
Thank you. And I think Simon's remark also very much echoed what Odile said before about the different languages that the biodiversity and the finance community speak. And I'd love to go into that, but we won't have the time now, unfortunately. So Christoph, do you want to throw some questions from the floor? I think
I'll do one question because we will have to close in 7 minutes. The question, thank you for the questions from the audience. I think some of them have actually been already touched upon. I want to throw in Fabio Pinner's question on the stakeholder coordination. He asked, what is your view about coordinating stakeholders in developing technology required to map business activities on biodiversity loss? It seems like counting only on private sector's initiatives might slow down the effort significantly. Therefore, how can governments and other stakeholders speed up R&D of biodiversity business link data technology? I think there are a number of people who can answer that. And if possible, we can also touch upon the other question, which is what tools are available already that scientists can use and data providers in order to speed up our research. Thank you.
Tenke, please.
Any volunteers?
I would ask Simon to go first and I'll follow.
Okay. Simon.
I'm sorry, you're going to have to repeat the question. I was distracted by switching off my phone.
Sorry, Simon, we should go to Marianne.
I very much agree with the question that there are some data points, some of the data side needs to be left to the market. And I think because there needs to be scalable business models behind offering the best biodiversity metrics and to financial service institutions. But there are a few data sets which are currently acting as a barrier and where the public sector has a major role to play. And that is exactly in the types of asset geolocation, those that will allow us to unlock all the other data sets or overlay it so we can actually, and that has a lot of regulatory implications because a number of jurisdictions has data localization policies. So you're not allowed to move data out of the jurisdiction where it is produced, etc. So there are some regulatory frictions in the current marketplace where we really need regulators to go in and help to better make that data layer available. There is a lot of data already for research purposes that you can use. The European Space Agency especially has their Copernicus program where the European Union has invested enormous amounts of money, and these are almost like sunk costs because a lot of these data sets are not being used. So they are really inviting everybody to use those. If you look at the oceans, there's the EMOD in the European Union. You can go in and find the geolocation of any offshore wind farm and lots of data on it. You can get runoff data from land to oceans, etc. So there's a lot of data infrastructure out there. And there are a few of them that we need the regulators to go in and help us with because of regulatory friction.
Simon. And in a 1 minute, and I know Robert wants to come in as well on this. So, I think Marianne's comments are absolutely right. I would add 2 comments. One is follow the puck. You know, in 5 years, the data ecosystem available on nature and how it relates to economy and finance will look utterly and completely different from what it looks like today. Yeah, and so the data gaps that we see today are real, but there will be a transformational surge in data availability over the next 5 years. And I don't mean that through a sort of utopian lens. I just think it's absolutely true. I think the issue is going to be more the degree to which that data is entirely privatized or whether it's available to a broader array of players, the extent to which it becomes overly focused on narrow definitions of materiality, or whether it covers a broader scope of nature dependency and impact. And thirdly, the extent to which there is a responsiveness in the model, you know, and I refer back again to the work we're doing on the governance of voluntary carbon markets, that we need to ensure that data systems are not driven purely and exclusively into Bloomberg terminals, you know, but are relevant and activating in a multitude of other actors that are going to need to respond to this nexus between finance, nature, and economy.
Thank you, Simon. Alice, please.
So just building on what's been said already, as has been noted, there's been a data transformation in the last decade or so. So we can now get almost real-time data on things like deforestation. And there are portals in place like Global Forest Watch, which will provide deforestation alerts if deforestation has taken place in certain areas. There are, as I mentioned earlier, supply chain initiatives like Starling verification that will allow us to develop deforestation-free supply chains. These tools are being linked up and being made available. And this is something that wasn't available even a short time ago. And it's not just the EU. There are similar initiatives all over the planet. And this way of thinking about how we can collect data just wouldn't have happened a decade ago. So, for example, the Belt and Road Project, which is China's big infrastructural project, the biggest infrastructural project of all time, has along with it something called the Belt and Road Science Plan, which has a huge investment for the generation of data to go alongside its projects so that they can actually measure the impacts it will have. The next question, as has been mentioned earlier, is how is that data going to be made available? Because with all of these trillions of terabytes of data being generated, how can we process it into ways that can be analyzed and be used and made available freely so it doesn't just become privatized and stop it being used? Given that a lot of this data is being generated through public funds, we need to be very clear about how that data becomes made available and also how it gets translated into usable forms. As a scientist myself, I spend a lot of time trying to convert this data into products that can be used to help make good decisions. However, as has been said earlier, many of the end users are not aware of how that data has been generated and the inherent assumptions that go along with it. So also providing clear guidance so it can be used effectively to inform decisions and doesn't misinform decisions because the people who are using it don't understand what the limits of its sensible use are. And understanding what the limits of sensible use and application are absolutely fundamental to making sure it can be used to inform the right decisions.
Thanks, Alice. Before I give Robert the floor, I just would like to ask everyone to think about one point they want to highlight as a closing point. So kind of if you can choose one action point that should be implemented. Please highlight that. But before we have Robert, and you can make your action point at the end, so you don't have a bit more time. Robert, please.
Sure. So no, it's a very big topic on the data one, but I think we'll never like solve the data quest or are eager to have like qualitative data because it's evolving. Now we are seeing like DNA-based metrics. I mean, how to compare DNA-based metrics for investors? That would be great. So the key I think here is really to have not a one-stop shop approach, but to blend data together to see which is the data that is applicable to you, to your organization. How can you use it? How can you pilot public tools? So getting your hands dirty, I think it's the most important part that investors should play, because you need to blend approaches because there are so many trade-offs to make between, is it a good carbon play, this company, is it a good water play, is it a good land play? So there are always going to be trade-offs, and for that you need all data sets and blend them together. So this is why I think you need this strategic thinking around what do you want to achieve, and then see how this data will play into this strategic thinking, rather than focusing solely on the data, which is just an indication of risk, an indication of opportunity, an indication of impact, but doesn't necessarily mean this is the end game. So yeah, just wanted to bring that in, and so the necessity to build partnerships as we do with CDP, with Iceberg, with UNFWCMC, with so many players, with Trace. So this is completely paramount.
Okay, great. I'll need to cut you off now. So let's move quickly to the action point. So Simon, your action point.
Yeah. So I'll keep it short. So I should be saying a strong global biodiversity framework and a powerful and ambitious TNFD. And now I've said them both. I can say something else, right? Which is the most scary thing going on right now, beyond the fires and the floods and so on, is the state of our global food system. It is so scary as it relates to nature, and it is so scary as it relates to food security, that we have to focus on that critical part of the real economy and figure out how to integrate nature and climate risk into financial decision-making in a way that is supportive of a more rapid transformation of our food system and does not have negative unintended consequences in disrupting food supply chains because of sudden increases in the cost of capital. So I would say all the things that Robert and others would say about the financial sector, but we have to really pay attention to what's happening to our food system. Thank you. And I apologize, Uli and Christoph, because I have to drop off to another call, but what a fantastic session. Thank you so much indeed.
Thank you so much, Simon. Bye-bye. Odile, over to you.
Thank you, Ulrich. I would say Simon said things that I wanted to say, GBF and TNFD. And more or less, Robert said also what I wanted to say. So yes, we need strategic frameworks at global level, at national level also. Someone spoke of NDCs for climate. There are the NBSAPs for biodiversity. So traduction in this at this local level, better synergy between NDCs and NBSAPs, because sharing things is the best way to do different things and not to make common things together. So, and perhaps one of the main words would be partnership, because for all of that, there is a need of partnership, because between the biological, the ecological, the financial families or sectors, and they can't work alone on their side. We see that. And as you say, data is important, but it's not the most important. Before that, you have all of that which is needed. Strategic view, partnership, and after that, how to do with data and metrics and so on. Thanks.
Thank you so much, Odile.
And thank you.
Sure. So I think very practical, whether we are scientists or policymakers or working at think tanks or on the investment side, I think the chief and practical advice to take forward is to ask these questions, whether you are engaged in any of these discussions. It's simply bringing biodiversity into the due diligence of how investments are being executed. Once those questions are asked, the data will also follow, and I think investors will also follow suit. So merely bringing this issue up is already adding to the communication around it. So I think it's practical, simple, and all of us can do it.
Great. Thank you so much. Marianne, very quick.
Yes, fully agree with Odile that we need the frameworks and metrics first, but I think in parallel, we can still work in regions where we have some of this. So for instance, in the European Union, where we have the SFDR, we could gather the industry in the spirit of partnership and regulators to make actual data roadmaps to see what do we already have, what sits locked in databases, and then what is the role of the private sector, what is the role of public sector, and then start to map that out in an actual data roadmap. I think that would be helpful.
Great. Alice, please.
Thank you. So there's been some really important points made today. I think one of the critical things we need to mention is biodiversity is not an optional extra. It's absolutely fundamental to everything we do and everything we have. And we need to remember that is the case. Sustainability is more than just climate. It's maintaining this planet and functional ecosystems. I think going alongside what the others have said, making sure that there is due diligence in all financial decisions is absolutely essential. And I think developing best practice guidelines from those that are already doing it well, making those publicly available, and also translating them into other languages, given that increasing investment is coming from other parts of the world, will be absolutely essential. For example, we see increasing investment coming out of Asia. If they are not also enacting and developing those best practice guidelines, we are going to continue to see biodiversity loss. So making sure that this is the new normal, that in terms of places like China, we realize ecological civilization by enacting these green finance regulations and making sure that they use data in the most effective way so we can maintain it into the future.
Very clear. Thank you. Robert Alexandre.
Yes, very quickly. Yeah, very quickly. So I think on the financial side, I think we should all adopt like strategies on biodiversity as on climate. So strategic thinking, support of TNFD, and like big frameworks that are being put in place. I would say high ambitions for and support for policymaking. The private sector should be involved in those discussions and push for aim for A, let's say. And also modesty about data and what we can do to solve the biodiversity crisis. Modesty about nature positive and this big terminology. I think this is paramount for the credibility of the financial sector actions.
Great, thank you. If I may just throw my action point here, I would like to see those governing monetary financial authorities to really take very decisive action to really set a framework where we won't see any nature negative finance anymore. And I hand over to Christoph for the very final action point and the closing.
Well, thank you so much, everyone. I will keep it very short, but what a fantastic panel. A lot of food for thought, a lot of ideas, a lot of challenges that we're definitely seeing. Thanks for joining. Also, thanks for the audience for sticking with us. Two quick announcements. First of all, there's a second biodiversity side event that looks particularly at the role of the sovereign and sovereign risks, which is co-organized by the NGFS. It's going to take place on Friday. You can find, of course, the whole schedule of the GRASFI conference online at beijing2021.sustainablefinancealliance.org. And the main conference, which I guess many of you will attend, will start in 20 minutes. I'm very much looking forward to see many of you there. And with that, thank you so much again for joining, and have a wonderful day. And hopefully we'll move from biodiversity negative to neutral and positive with all your great ideas and support. Thank you.
Thank you so much all. And let's hope that the action points will be put into action very soon. Thank you and goodbye.
Bye-bye. Thank you.
Thank you. Bye-bye.
Thank you.